So let's start with selling or shorting call verticals. When we sell a call, what do we want to happen? We want the stock price to go down. So this is a purely hypothetical example using numbers, easy numbers, so it hopefully helps explain this thing. So we're going to start over here and just assume the stock price is $100. And in this case, we're going to start with the example of selling the 100 call. Now what does that mean? We sell a call, we want the stock price to go down. So you can see here, the arrows are green because if the stock price goes down from $100, we make money. On the flip side, anything above $100, you see it's red because we lose money, right? When we sell a call, we want the stock price to go down. So down is our profit, up is where we get to that undefined risk area, right? We don't know how far the stock can go up, so we don't know how much we can potentially lose. That's the part that scares us as beginning traders. So how can we fix this? We can do something called a vertical. The stock price is $100. We're selling this $100 call. Normally, anything above $100 is where we start losing money. But we're going to do something a little different here. Remember the definition of a vertical, right? It was buying and selling a call, which sounds kind of weird. So we start with the same example. We're selling $100 call, but now we're also going to buy the 105 call. So what does that do? You see this area here called defined risk. So how does that work? Well, remember, if it goes below 100, we make money. Anything above 100, we start to lose money. But if we also buy the 105 call, when you buy a call, what do you want to happen? You want the stock price to go up. So you can see here from these green arrows that anything above 105, we start making money. Okay? So what happens is these actually cancel each other out from 105 up. Everything we lose on the sold call right here, we make on the bought call right here. So this whole area is a wash. And what happens when we do that is we define the risk. We end up with this box here. This pink area is everything that's involved with the trade. This is the most money we can make or lose as a whole right here. We've defined the risk because above 105 it washes itself out. Below 100 we still have some profit because that's what we want to happen. But here the pink area is now defined. It doesn't just go on forever if it goes up because we've bought this call to protect ourselves. So let's go to a trade page and really start hammering this down and see how this concept plays out in reality.